For over a century, people have treated the stock market like a money machine. It made fortunes. It destroyed dreams. It turned people into millionaires and crushed retirements in a single week. You've heard it before. The market always goes up. But is that really true? And more importantly, does that even matter to you? Today on Hermes Code, we're going back to the beginning. Because to understand the stock market today, you need to understand how it was built. And surprisingly, it all started with spices. It's the 1600s, Amsterdam. Spices like pepper, cinnamon, and cloves were more valuable than gold. But getting them? That was deadly business. Ships had to sail across oceans, survive storms, and dodge pirates just to make it to Asia and back. It was risky, expensive, and chaotic. To solve this, the Dutch government did something radical. They merged 6 rival trading companies into one giant enterprise. The Dutch East India Company, also known as the VOC. But that wasn't the game changer. What changed history was this. For the first time ever, they sold shares of the company to the public. Anyone could buy a piece of the action. And if the voyage was successful, they got a cut of the profits. It was the birth of public investing. To keep track of all these trades, the world's first official stock exchange was born, the Amsterdam Stock Exchange. From that point on, the idea of risk, ownership, and reward changed forever. That's where the foundation of the market began. 3 invisible forces hold it all up. First, reward. The promise of profit pulls people in. Second, risk. Without risk, there's no opportunity. That's what makes the game worth playing. And third, speculation. The wild card. The fuel behind every rally and every crash. People betting not on what something's worth today, but what it might be worth tomorrow. And that's where things get dangerous. Let me introduce you to the first asset bubble in recorded history. Tulips. Yes, tulips. In the 1630s, tulip bulbs became luxury items. Their prices skyrocketed. At the peak, people were trading entire homes just to get their hands on one rare bulb. Speculation took over. People stopped caring what the flower was actually worth, only what someone else might pay later. Sound familiar? Then in 1637, it collapsed. A single failed auction triggered panic. No buyers, prices crashed, fortunes vanished. The lesson? Speculation is powerful but fragile. And when belief disappears, so does the value. Fast forward 400 years. Today, there are over 60,000 publicly traded companies across more than 60 global exchanges. But when people say the stock market, they're usually just talking about a few indexes. The S&P 500, the NASDAQ, the Dow Jones. These track the largest U.S. companies. But back in the late 1980s, it was Japan that ruled the world stage. The Nikkei 225, Japan's main index, had higher valuations than the U.S. Tokyo was more valuable than Wall Street. Then it collapsed. Speculation had driven up real estate and stocks. When the Bank of Japan raised interest rates, the bubble popped. The Nikkei lost more than 60% of its value. And here's the kicker, it still hasn't fully recovered. Not in real terms, not after inflation, not even after decades. So ask yourself, what if you were 35 years old in Japan back then? You would have spent your 40s, 50s, even 60s underwater, waiting to break even. The market did recover eventually, but you may not have. Now, here's the part people don't like to admit. Yes, the market goes up in theory, but it doesn't always go up in time for you. When the U.S. market crashed in 1929, it took 25 years to recover. An entire generation never saw their money come back. The S&P 500 earned almost nothing across the 1970s once you factor in inflation. Italy's market still hasn't recovered since the late 90s. So the next time someone tells you, just wait it out, you better ask them, how long are we talking? Because here's what's different now. Today, markets are globally connected. A crash in New York can trigger fear in London, Tokyo, or Hong Kong within seconds. We don't have isolated bubbles anymore. We have a giant, global skyscraper of markets, all tied together. And you? You live somewhere inside that building. Which brings us to the most important truth. You don't live in the S&P 500. You don't retire inside the Dow Jones. You don't pay rent with the global index. You live in your own economy, your personal financial timeline, your real life. That's what matters most. Because the market doesn't need to work forever. It just needs to work in time for you. That's the Hermes Code. So stop asking, will the market always go up? Start asking, will this strategy get me where I need to go when I need to be there? If this video shifted your perspective, comment the word timing so I know you're serious about your goals. And don't forget to subscribe. Here at Hermes Code, we don't just believe in the market. We believe in your market, your timeline, your wealth, your rules. We'll see you in the next one. Until then, think long, act smart, and move.